A very good morning. My name is Malcolm Grahamwood, and it's great to be back here at Core Finance TV for another CEO interview. And today, I welcome back Andrew Knott, CEO of Savannah Petroleum. Welcome back again.
Thank you very much.
Nice to see you, Andrew. Obviously, as these interviews progress, we get to know more and more about the company. But just for those people who don't know too much about Savannah Petroleum, if you just give me the overview.
Yeah, no problem. So Savannah is an AIM-listed oil and gas company focused around West Africa, assets in two countries, Niger and Nigeria. The Niger business, we have a very large asset, very low risk, that's proven to be very successful. We made 5 exploration discoveries this year on it. We expect to get that into production next year, and we see a lot of growth through the drill bit in terms of expanding that resource base out. In terms of the Nigerian business, we're in the process of acquiring a business which supplies about 10% of Nigeria's power. And again, in that business, it's got very good growth dynamics, and both from a volume and a pricing perspective. So we've got 2 quite exciting businesses, both of which have strong growth potential.
Excellent. Right, you've just announced an update to the Seven Energy transaction today. Why don't you walk us through it and tell us what you've done?
So, look, at a high level, there's 4 key things that we're talking about in the announcement today. Okay, so in the first instance is the financial impact. So we're getting $70 million of additional cash into the business. We're increasing the NPV of the business, of the assets that we're acquiring, by 35% to just over $1 billion on a gross basis. And we're increasing the expected cash flows on what's called the DCQ case by about 58% per annum to just over $150 million per annum. So from a financial perspective, it's pretty compelling what we're doing.
Yeah.
But from a non-financial perspective, what we've announced this morning does is it means that we have control of the molecules that we produce from the reservoir, i.e. in the ground, all the way up directly to the power station door that we supply, which is very important, especially when seen in the light of some of the other transactions we've announced this year. And then the third thing is we're adding an additional power station customer. The owner of that power station is the same owner as the main power station we currently supply, Calabar. In aggregate, that means we'll be linked up to around 250 million scuffs a day of potential demand from that customer, of which the current contract's only 130 million scuffs a day. So that gives us a lot of clarity in terms of the sort of growth that we can deliver in this business over the near and medium term. And then lastly, which I'm very pleased to say, is that we're in a position now where all the commercial aspects of the CPs have now been fulfilled. Therefore, what we're now doing is legal procedural type work to close out the transaction. So it's very, very good news. And like I think one of the things that you've pushed me on in the past, and I've said very publicly, is that when it became clear to us how good the growth dynamics in the underlying business was that we're buying, strategically, it became very important for us to get access to more of it, and that's what this does, and it also releases quite a lot of liquidity along the way. So we're very, very happy with what we're announcing this morning.
Which is great. Now, there's so much in that little bit. Just to get it right, you increase the stake in Nuclear Gas, but more importantly, because this is the bit that and more importantly, in the bit that I've been really keen on is AccuGas, which had been funded by the fund, and you've brought a lot of that out now. So, as you say, you increase the NPV, and the cash flow comes on as well, which is as expected. And of course, the addition of this Alauji power station means another new customer, and is that presumably because it broadens the base, as you said. And as you say, it starts a roadmap of enabling the second train to be built. So, not only have you got more gas molecules, as you say, you're putting it all the way through. In terms of demand in southeast Nigeria, you must be pretty confident about that. Yeah.
So what is required is you have to be able to demonstrate that you can produce and deliver volumes on a sustainable business, and then what you've seen this year is we also announced that we're moving ahead with a project called the Calabar Gas Distribution Project that's focused around industrial customers. But the benefit of supplying a power station is they can offtake very large amounts of gas in sort of as a discrete volume. So You'll need a mix of both going forward, but the sorts of volumes that are associated with power stations, like you think about, as you said, adding additional trains, etc., etc., and that really lets us leverage what we've got. We're the only supplier and transporter of gas in any size in the southeast of Nigeria. So therefore, as demand increases, we're the natural person to go to, and the pipeline network that we have has very significant excess capacity, which we intend to fully utilise.
Excellent. Now, so the cash generation at Severn, you obviously must be very confident now. You mentioned it a couple of times. We talked about it, because you've always said that this was going to be a cradle to grave business, which is going to produce substantial cash in order not only to be able to pay for Niger, which we'll come to in a minute, but also to talk about dividends and further acquisitions. So you must be pretty confident going forward about the way things are going to be.
Yeah, so I think as well, the other thing is, so like the cash flow generation of the assets we expect to be very strong, but what's happened is that when we announced the original deal, we were non-operated on the main oil field, non-operated on the central production facilities. We were not going to be the majority owner of the distribution business. We had 3 customers, etc., etc. So now what we've got is we're going to, between all the transactions we've announced this year, we're effectively the operator of the gas. We will be the operator of the CPF.
Yep.
We'll be the majority shareholder in the distribution company. We've got an agreement to manage and then ultimately to acquire the last piece of pipe that gets the gas to the power station, etc., etc. So what we've done is we've secured control of the company's destiny, which is something which Severn never had in the past.
Yeah.
And that makes a real difference in terms of being able to drive that sort of value creation agenda and that cash flow generation going forward. So that's the sort of strategic rationale, but the fundamental rationale, as we view it, is a very accretive series of transactions.
Is it my imagination, or is it that when you first started doing the Severn deal, you probably thought this was a wee bit further down the line, wasn't it? Or has this come into your lap a little bit early?
Yeah, look, I mean, when we did the original deal, we were very focused around the value proposition and less so on the growth potential. And what has happened over the course of the last year is we've got more and more confident in that growth story and the potential and our ability to be able to access that growth story. And the way to do that is to maximise the control you have over the underlying business, so that we are responsible for delivering that growth agenda, and that is what we've thought we've done. So yes, I think we're much further ahead than I expected to be at the beginning of the year in terms of the progress that we've made in the business. 2019 will be another big year. There's a lot of plans that we have for driving more growth through, so additional customers and additional upstream resource. Which I can talk about more if you'd like, but there's just a lot. There's a lot to be done.
We'll come back to that in a minute if we get a bit of time, because I know that we'd like to talk about Niger this year as we come to the end of what has been a fantastic year with 5 good well results and so on. What are the plans now? You're going into all the rest bits and pieces.
Okay, so what we said when we finished the last drilling campaign was it was very important that we did a little bit more technical work, so we wanted to do some PSDM work. And what that enables us to do is to better delineate what we've discovered, but also to better delineate some of the other potential targets that we have in the block, particularly in some of the deeper horizons that underlie some of our existing discoveries. So we expect that work to be completed substantially in Q1. What we're seeing just now is very encouraging, but the work's not completed. And from a cost perspective, and I think you're aware we're a pretty cost-focused company in terms of we're very proud of the fact we've always delivered operations ahead of budget. To maximise the efficiency of that programme, we want to all go out at once. So when we start to get rigs mobilised and all the rest of it, we want to do something in a quite comprehensive manner. So we want to do the early well test. We want to start drilling additional appraisal wells. We want producer wells as well. We want to move into the exploration. We want to do a new round of exploration activity in Niger. So we'll do that on a coordinated manner, probably starting in mid Q1. But we're very confident about that. We submitted now the pre-feasibility study to the Niger authorities around the development. I think we've published some of the numbers associated with that. And if you look at the analyst consensus, you're looking every 1,000 barrels a day is about $10 million of cash flow. So it's quite there's a lot to play for in 2019, and it's a very, very good asset.
So these will almost be bundled together by the time you've done, having done the feasibility study, you've got MD1 testing, and obviously all the other the targets and then a drilling campaign, which will be in the deeper areas and so on. So there's going to be a lot happening in Niger next year. Would you still be looking for a partner to do that with?
So look,
you've talked about in the past.
The asset itself is highly repeatable. It's low cost, and we've proven the quality of the asset. All the sorts of things we've been talking about over the last 3 or 4 years have come through. So any deal that we did on that asset will have to reflect the fact that it's a special asset. But yeah, there's no sacred cows in the business. If we get the right partnership, we put the right partnership together, then I'd fully expect us to bring in a partner. But you're now at a stage in that project where you can see and smell the cash flow, so to speak. So that makes the valuation prospectivity much more straightforward.
It certainly helps. And I mean, with in the situation where as you look towards the second half of the year, in both sides of the business, you can play hardball a bit on a farm out if you need to, and stay in R3 and move gently into the other areas, or because you've had so much success there.
So in R3, clearly that's where the development hub is going to be focused, and then the exploration prospectivity, as I said before, is more typically looking at some of the deeper structures that underlie some of the existing discoveries. This is in the R3 East area. As we move into R3 Central, which is to the north of the R3 East area.
Yes, that was what I was thinking,
then there's a lot of very interesting structures, and that's the next natural place to go and look at. But I mean, there's a lot of deeper, very big structures in R2, not the stratigraphic stuff in the south, but structural stuff in the northern part of R2. And then in the southern part of the R1 area, there's some very interesting structures there as well. But in terms of what we think is the most effective way to proceed is almost certainly to continue along the trend of what we've just discovered, so that we're maximising the efficiencies in any future development.
So maybe the best bet now is to go to the sort of end game. There's so much going on at Savannah. I'd like to put together all the vision for the next 12 to 18 months, come back to any bits on Nigeria if you wanted to, talking about the closing of the transaction and various bits and pieces. Where do you see how busy are you going to be in the next 12 to 18 months?
Okay, so the key things for us, 2019 in Nigeria, is about delivering the production growth and then leveraging the value of the assets that we have. So that involves adding additional customers through the Aki gas business, and then in the upstream portion accessing additional gas resources so that we can do things like start to plan for building additional trains in the Aki gas business, etc., etc. The barriers to growth, I fundamentally believe the barriers to growth in that business, the real big game-changing growth, is commercial. So there's a lot of commercial work streams that need to go on over the course of the next year to really deliver on the potential of that business. In terms of Niger, it's doing the well test, then turning that into the early production system, and then doing the exploration and appraisal drilling that we've talked about. That's very exciting. You've got a business with a finding cost of $1 a barrel and an NPV of the early stuff of somewhere in the $6 a barrel range. Clearly that's a really good business and something that we want to get on with. And then at the corporate level, obviously, we expect to be paying our maiden dividend, which I think is a sign of the strength and confidence that we see in the underlying business.
And further acquisitions, you've said that you're always on the lookout for things, and paying a dividend doesn't stop that. So
it won't, but to be clear, in the first half of 2019, I expect us to focus on building out what we have. We're always going to look at other things, but that's not really where we are. Our heads are not really on doing something. There's plenty of transformative stuff we can do with existing assets.
I'm sure shareholders and investors would want you to do all this before you maybe do it. I mean, and you've got so many. You're building one hell of a business here. I've heard you say that 2019 is going to be a transformational year for Savannah. Yeah?
Yeah, hopefully, yeah. We fully expect it, yeah. And look, and I mean, clearly as well, I mean, like, I think from a value perspective, if you just, in pure isolation, if you look at what we've announced this morning, like, the value that's implied for just basically the UCO piece is more than our current market cap.
Yeah.
And that, obviously, you've got the Niger business, which is clearly worth a lot of money. We've got the Stub Creek business, which produces oil and generates a reasonably large amount of money, etc., etc., etc. Plus, you've got all the undeveloped gas assets in Stub Creek. So I think what we need to do is we need to demonstrate that value, we need to deliver the cash flows, and if we do that, I think everything else will look after itself.
Well, it sounds very exciting. I'm glad that we're sharing it with you, Andrew. Thank you very much for coming in. Today's CEO interview has been with Andrew Knott, the CEO of Savannah Petroleum. My name is Malcolm Graham, with us being Core TV. Thank you very much indeed for watching, and see you again next time. Bye now.